Hey everyone, me Kevin here. This video is going to replace my market closing live stream as I have to hop on a plane very shortly because I'm going on vacation. Unfortunately, I am also going on vacation right after dyeing my hair red and the market beginning to crash. However, we do have life insurance we can get in as little as 5 minutes by going to metkevin.com/life. You can get a beautiful live streaming software called StreamYard by going to metkevin.com/StreamYard. Excellent platform, way better than Streamlabs. And, of course, you can take advantage of the Cyber Monday week coupon code link down below, which does expire tonight. Now, I hate saying that because I know people are like, Kevin, it's always expiring. The price does go up over time. So we did raise the price after Black Friday. We're going to raise the price after this week, and then we're going to be done with sales for a while. So no more course pitches for a while, okay? But here's that last opportunity. Now, let's talk about what the HE double hockey sticks is going on in the market. After I talk about what's going on in the market, I'm going to talk about my recommendation as hashtag not financial advice. Now, let's get into this. First, we have multiple catalysts for December. We know that I have been selling a lot over the past month. I've been selling I raised about $5 to $6 million in cash over the last month. However, here's the problem with trying to time the market. I'm going to be very, very transparent here, okay? I expected an end-of-the-year rally. I bought a bunch of options. The end-of-the-year rally came. I made tendies on a lot of those. Not on everything, but I did really well on a lot of things. Then I started selling. And then I started selling shares at some of the peak euphoria that we had. Unfortunately, I started buying back in at just the first signs of the dip over the last couple days. That was a mistake. I made a mistake. I failed. I took about 30% of the cash that I raised and started buying too early. Now, the market is selling off more. And the question is, where's the bottom? Well, folks, I'm going to tell you where the bottom is. And it's not beautiful. I'm going to tell you that in just a moment. First, I want to go through the fear catalysts that we have right now. And I want to specifically highlight which one I think is the most fear-inducing. First, we had a fear catalyst that Congress would not extend the budget. They did. The market didn't care. Literally nothing happened. The market just did not move. Why? Because we get the game now. Congress sucks at their job. They're weenie baby pansy bitches. So cross that off the list. Nothing happened. Nothing, Burger. Okay? Next, the jobs report came in today. It actually came in my opinion, in the best case scenario. It proved that wages were not going up at incredibly fast paces as an aggregate average. I know that wages are going up in a lot of places, but as an aggregate average, we're not seeing a wage price spiral. This reiterates the long-term thesis that we are not in a long-term inflationary trend. We went up on an average of 3% at an annualized rate. Now, looking back a year, we're up 4.8%. But at an annualized rate, our inflation in the last month for jobs was only 3%. That's low. 3%, I mean, I suppose historically is still high, but it was certainly well below estimates, substantially below estimates. And we were worried that what if jobs come in super hot? What if we come in with 700,000 jobs? Jerome Powell's going to wake up and go, oh crap, let's taper more right now. Screw it. Screw waiting for the meeting. We'll taper now. No, we missed substantially because the market is not overly hot. The market is recovering, but I think we are on a strong trajectory, but certainly not an overheating market where we have to worry about fears of hyper activity in the market. The Fed's going to come out and crash the market by raising rates substantially and very, very quickly. If anything, today's jobs report is more reminiscent of potentially what's happening in Brazil. In Brazil, you have 10% inflation. You had negative GDP growth last quarter, and you have flat to slightly negative GDP growth thus far this quarter. 2 quarters in a row of negative GDP growth. Guess what you're in, folks? The R word. You're in recession. That's Brazil. It's not America. We're still growing. We're growing slower, though. But anyway, jobs report. If anything, while it was good that we're not overheating, it was potentially too far to the good side to where it became bad, towards the deflationary side. CPI coming out on December 10th, whatever. We know there's going to be some inflation right now. We know that a lot of stocks have run to euphoric highs. Matterport, Enphase, Etsy. There's a reason I've been trimming some of these. I trimmed some Tesla, I trimmed some Etsy, I trimmed some Enphase, trimmed. Now the problem is, and this is why it's so freaking hard to time the market, but it's you see the intuition, okay? The pattern of intuition. I trimmed these stocks. I wish I trimmed more. For example, I sold a bunch of shares of Etsy, like 1,500, 1,000 or 1,500 or whatever of Etsy. I wish I just sold everything at $280, but I didn't. I was diamond handing the rest. You know, I took a little bit of money to build up a little bit of cash and I diamond handed the rest. So I don't like to trade the whole portfolio because it's difficult to retime your buy. It's kind of like yesterday. I'm the numbskull who's thinking, oh, we've had a nice dip. I'm going to nibble. And I made it very clear that this was just nibbling. I'm going to do little nibbles on like Nvidia and Affirm and whatever. Look at today. Disaster. Look at SoFi, folks. Okay, this was freaky. You want to see SoFi? Watch this, folks. This is insane. Okay, I'm always talking about how important support and resistance lines are, and the long-term investors are like, yeah, whatever. Look, I have tweeted about SoFi having a support line at 1471. Look at the minute chart today, folks. Oh, why did it go dark? I have no idea why it went dark. There it is. Look at that. How weird is that? That is basically a solid bounce off of the line that I've had drawn for months. Look at this decline that we're seeing here, okay? There's a lot of pain out there right now. But why, folks? Why? If it's not jobs, if it's not Congress, if it's not the debt ceiling, what is it? Well, I'll tell you exactly what it is. Out of the entire list we have, it is fear of the interest rate increase. Fear that Jerome Powell has become a hawk. You want to know why there's a fear of that? It's because of what happened at the end of 2018, which if you've been a loyal subscriber since the end of 2018, you already know what happened at the end of 2018 because you know I was making videos in May of 2018 saying, folks, the real estate market is starting to tank. And it did. It fell 12% in a matter of 2 months. Why? Because interest rates skyrocketed. Then after interest rates skyrocketed towards the end of the year, as Jerome Powell stayed strong with his interest rate increases, although he stopped raising rates further, he stabilized, stopped raising rates further, he stopped, and he's like, okay, we're going to take a pause here. Guess what? The stock market fell. But how much? And this is the really important part, okay? Listen to this. The S&P 500 has not had a sell-off of more than 6% since March of 2020. We have been on a straight path of nothing but cheap money, free money, debt galore, people going nuts into margin. We're at the highest levels ever right now of FINRA margin. Literally the highest levels of FINRA margin debt. Just Google that one. FINRA margin debt. This data just came out like a week ago. We are at the highest levels. Look at that. We are nearly $1 trillion in margin debt. We have never been at these high of levels. In March of 2020, or I should say right before March of 2020, so January of 2020, we were at $561 billion. Now we're almost twice that. You gotta be kidding me. This is a lot of freaking debt. People are gonna be losing their minds. If they haven't been listening to this channel for the past month, and if you're not just a title reader, like if you actually watch the videos, you will nod your head when I say I have been nervous. I have been feeling too much euphoria in this market. I have said a million times, get out of freaking margin. Okay? Hopefully you did. Hopefully you have. And we're going to talk about strategies in just a moment in case you haven't. But how bad can it get? And look, I don't want to be like fear-mongery or whatever here. The market could literally just rebound on Monday. We could have a massive big buy the dip and everything rebounds on Monday. But these are the times that we want to remember when we're going to talk strategy again as to what to do. But these are the times to remember how bad things can get, okay? Let's just look at how bad things can get. So what we're going to do is we're going to go all the way back to the end of 2018. We're going to look at the 2018 dip, which was right over here. There it is. This is the end of 2018 dip. We hit a high of $293 and we fell to $233. That's just over 20%. And look at this. For us to recover from December, it took until about February to March to fully recover. So it took a good 3 to 4 months to recover. Depending on where you measure from, some folks say the dip really started in October, and the October dip didn't actually end until April, which is a 6-month decline on the S&P 500. or 6-month process for where half of it declined and the other half it recovered, right? So there are serious beliefs that, and I think this is the biggest fear, that Jerome Powell becoming hawkish, which I think is totally bullcrap. I think Joe Biden pushed him to be hawkish so Joe Biden could, in my opinion, and this doesn't matter if you're a Democrat or Republican, I'd say it either way, in my opinion, selfishly is telling Jerome Powell, you need to sound like a hawk because I need to get my Build Back Better plan done. And by doing that, he has encouraged Jerome Powell to, well, A, Jerome Powell was able to keep his job, but B, Jerome Powell's able to now to say, all right, we're going to retire the word transitory. Yeah, we're going to consider tapering a little faster. Okay, look, folks, let's be real. I think I've been very crystal clear on this channel. I believe that inflation would inflect down at the end of this year. I was wrong about that. I did not say inflation would disappear, but I did say that inflation would inflect down. That has not happened yet, but it will. It will. Inflation will go away. In my opinion, with 2 years, we'll have another 2 years probably of inflation. By 2024, we're going to see lower rates and we're going to see potentially falling prices. That's deflationary, right? But between now and then, we have this market where I think the market is going to be very excessively fearful of the Fed. And they're going to look back at 2018. They're going to go, dang, I need to be a little bit more protective. Maybe I need to short the market. Maybe I need to take some profits. And profit taking, I think, is going to happen on steroids in this kind of market. Why? Because stock valuations are at record highs, and it makes no sense for people not to look at their portfolio and go, well, dang, if I could get out with the double, why not get out with the double now and then maybe just buy the dip back later? And if it doesn't, if I don't get a continued dip later, who cares? I made a lot of money. I think that's what's happening in this market. So I think we have a lot of profit or loss taking to avert further loss because of the interest rate fear. The interest rate fear is strengthening such that, ironically, the 10-year treasury, these are long-dated bonds, are actually falling. And this is something that happens. When the market thinks that long-term inflation is going to be very, very low, which is defined by 10 to 30 years, you see these bonds falling. Let's see what the 2-year is doing, okay? I have not looked this up yet. I am doing a little bit of a guess here together. Let's see what the trend is of the two. Okay, so it's tiny little bit down right now, but look at the trend over the last month, folks. You see that 2-year trend? Oh, no, you can't. No, now you can. Look at that 2-year trend. It's straight up. The 2-year is straight up. That's because we expect higher rates in the short term, but we actually expect deflation, or maybe not necessarily deflation, but we expect lower rates in the long term. That's the 10-year from Britain. We don't want that. We want the United States 10-year. There we go. And over the last month, you'll see the decline. So we're going to go to month. Look at that decline right here. This is where we had some fear that maybe Jerome Powell was going to be more dovish, right? This is where we thought that we were actually going to get Brainard, who is more dovish than Powell. So rates actually went up. When Powell turned into a hawk, they plummeted. It makes sense. It all makes sense. The problem now is, what's the strategy? How do you invest now? And what do you do? First of all, I revealed a lot of things to course members this morning. I revealed a substantial move in my portfolio, a huge move in my portfolio. I revealed new business opportunities that I have coming up and some massive new plans and purchases that I'm making. Huge ones. And I'm going to keep those, in fairness, a secret to my loyal course members. They will always be first to take advantage of any kind of information that I have. That's just the way it works. You pay once and you are forever a Meet Kevin supporter and course member. I highly encourage you check that out. Use the Cyber Monday code. It's not going to get cheaper. Like, there will never be a point it will be cheaper in the future. So check that out. Link below. And also make sure to go to metkevin.com/StreamYard because it's a really good streaming platform. So if you want to make a YouTube channel and you want to stream or whatever, check that out. But for right now, we got to talk strategy. Okay? So the strategy right now is that we've got to talk about what to do in this sort of market. All right. So here's the thing. This is the kind of market where you should look at your portfolio, and you don't want to become a paper-handed weenie baby, right? Nobody wants to do that. Crazy market. Here's what you want to do. You got to look at your portfolio, and you got to ask yourself, what do you need over the next 3 to 6 months and what do you need compared to, or what do you have compared to your portfolio? So for example, we talked about this in the course member live stream. If you are buying a house in the next 3 months and you've got some profitable options or some things you can close out, maybe take that cash and preserve it so you don't miss out on your opportunity. You don't want to miss out on buying a home just because the market shifted, right? If you are in a situation where you do not need the cash for the next 6 months, and maybe you even have cash available because you started selling, this is, in my opinion, a time to buy the dip. Maybe not necessarily on all things, and potentially you want to wait for a bounce, which I will be buying the dip as well at some point here. The volatility index has already declined a little bit intraday. We were as high as 24%. We've come down. We're sitting at 18 right now, so things are calming down a little bit. Probably means the SPY is rotating slightly up again a little bit. If we go to the minute chart, probably see a little bit of a hockey stick here. Yep, a little bit of a hockey stick. So things are calming down a little bit again, but that doesn't mean we can't continue to go up. Look at the volatility index, folks. The volatility index is the highest that we have been since February of 2021. And really, a lot of this was because of the GameStop crisis. So you should really be going back to the volatility of right before the election of 2020. That was a great time to buy. If you could just go back and buy stocks solely when these peaks are, it's a great time to do it. The question is, how long is this going to last? Because we could get this kind of peak up here, and then you could continue to peak up, peak up, peak up, and the volatility can just keep going. Now, I don't think so. I don't want to come across as like a fear monger, but that's literally kind of what we've been doing here is we've been peaking up, 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 up. So, but again, right now it does seem to be falling at the very moment that I'm recording this, about 17%. So the way I would approach this market is, if I need cash, I would raise that cash right now. And this is not financial advice, of course. If I do not need the cash and I have the opportunity to buy the dip, let me tell you what I'd be buying the dip at. All right, let's go. So, first of all, first recommendation, not financial advice. I'm looking at SoFi, close to 1471. I like this, okay? I like Enphase under 200. I've regularly said that I like Enphase under 200. You're not paying that much of a premium on Enphase right now to get it at 218. I like Etsy under 225. You're not paying that much of a premium on Etsy at 229 right now. I would stay away from the Chinese stocks, especially with the DD delisting. Let's see what else we've got here. Hood. I really believe that Hood is primed for a massive U-turn. But it's going to fall with the market for now, especially software stocks. Understand this. DocuSign does not have on a 3.5% miss on billings or a 2.5% miss on guidance. You do not have your stock because of that. DocuSign falling like this is the pure definition of the market finally realizing that Bloomberg, which I reported 3 weeks ago, was right. Software valuations will compress. Valuations across the board will compress. We are going to see valuation compression, and it's probably because of interest rate fears. Now, hopefully, we buy the dip, we go back to the moon next week. But that doesn't mean you shouldn't raise the cash that you might need over the next 6 months for a real estate purchase, a business opportunity, some other opportunity. Once you have that clear, use the rest of your money available to buy the dip. That's my belief. And I like the prices where a lot of these things are right now. I like that we're getting Matterport under 25 again. I like that. I think that's actually healthy. I like Adobe falling 10%. Let me look at Cloudflare. That's another one that I've been trying to get in on. Cloudflare, look at that, 161. It's only 161? I thought it was going to fall more than that. Snowflake's down about 4%. What else do we have here? Let me look at the upside. What's up? Volatility, Marvell, Take-Two, big deal. Costco, big deal. There's like virtually nothing up. Let's see. Fully here. Very few things are up. Look at this flight to safety, folks. FedEx and AT&T. This is a flight to safety. Omicron is certainly having an impact here as well. Home Depot, HelloFresh, Starbucks, these guys are all barely down. But I would be hunting. And right now, anything with a higher valuation, whether it's CRISPR Therapeutics, whether it's Momentum, whether it's a SPAC, is getting whacked. That's the way it is right now. Even Tesla down 6%, Bitcoin down at 53,000, breaking the lower supports. Affirm down at 107. These are really great prices, But I just want to be crystal clear. They can continue to go down, and so I highly encourage raising capital that you might need solely for necessities. But if you have no necessities, you've listened to this channel over the last 2 months, and you've raised cash, you've taken profits on things, and you've raised cash, take the extra money and look for ops. Buying up, buying up, buying up, buying up, buying up. That's the way I'd be acting right now. So, with that said, I wish you sincerely the best. I love all of you. I will never be leaving YouTube. I'm not effing leaving. The business opportunities that I have, if you want to be involved in those, go to metkevin.com/cashflow. If you want first dibs at them, make sure you are part of the courses. Use the coupon code down below for Cyber Monday week. The code Cyber Monday. And with that said, thank you so much for being a serious supporter of the channel. I honestly hate the fact that I'm going on vacation right now because I feel like this is the time that I'm most needed. So, I don't know, I might have to do some iPhone videos. We'll see. But folks, I'll see you in the next one. Thank you so much. Goodbye.